Welcome to Smart Stock Watch. Today is August 11th, 2025, and we're diving into Sphere Entertainment's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, Sphere Entertainment has been making waves in the entertainment industry. Can you give us a brief overview of the company and its latest earnings report?
Absolutely. Sphere Entertainment is a leading live entertainment and media company known for its innovative Sphere venues and MSG networks. In their Q2 2025 report, they highlighted a revenue increase to $282.7 million, a 3% rise from the previous year. The company also reported an operating loss improvement and a significant gain on debt restructuring.
Revenue and profitability overview. Let's start with the top line. Sphere Entertainment reported revenues of $282.7 million for Q2 2025, marking a 3% increase from last year. John, what are the key drivers behind this revenue growth?
The revenue growth was primarily driven by the Sphere segment, which saw a 16% increase to $175.6 million. This was due to more corporate events and additional concert residency shows. However, MSG Networks experienced a decline in revenue due to a decrease in subscribers and fewer sports telecasts.
Despite the revenue increase, the company reported an operating loss of $50.2 million. How does this compare to their adjusted operating income?
Interestingly, their adjusted operating income was $61.5 million, a significant improvement from the previous year. This reflects their strategic cost management and increased revenues, which helped offset higher direct operating expenses.
Operational efficiencies and future outlook. Sphere Entertainment's CEO, James L. Dolan, mentioned confidence in their global opportunities. What operational efficiencies have they implemented, and what does the future hold for them?
Sphere Entertainment has focused on reducing selling, general, and administrative expenses, which decreased by 6% this quarter. They're also expanding globally, with plans for a new Sphere in Abu Dhabi. The CEO's confidence stems from these strategic initiatives and their potential to drive long-term growth.
With MSG Networks facing challenges, how is Sphere Entertainment planning to address this segment's performance?
They're restructuring credit facilities and renegotiating media rights agreements, which should help stabilize MSG Networks. The focus is on adapting to changing media consumption trends and enhancing their direct-to-consumer offerings.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.57 for Sphere Entertainment, but the actual EPS came in at $3.39. That's quite a difference. John, what contributed to this significant beat?
The major factor was the gain on extinguishment of debt, which added $346 million to their bottom line. This one-time gain, along with improved operational performance, led to the substantial EPS beat, surprising analysts and investors alike.
How many analysts were covering this stock, and what does this mean for investor sentiment?
There were 3 analysts covering Sphere Entertainment. The EPS beat is likely to boost investor confidence, as it demonstrates the company's ability to manage its financials effectively and capitalize on strategic opportunities.
Key takeaways. In summary, Sphere Entertainment has delivered a strong performance in Q2 2025 with impressive revenue growth and a significant EPS beat. John, what are your final thoughts on their investment prospects?
Sphere Entertainment is showing resilience and strategic foresight, especially with their global expansion plans and effective cost management. Investors should keep an eye on their future developments, particularly in the Sphere segment.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Sphere Entertainment's performance in the comments below.